And good morning and welcome to the Short Vol Show Live. My name is David Lincoln, and we have a kind of eventful day shaping up in my little part of the planet in finance, where I'm trading BYND and UVXY currently. My current position in UVXY is I have no position, but that doesn't mean I'm not trading it. And BYND, my current position is I did come in short today, and I sort of have a big condor with the bottom section being around the 120 to 100 sort of strike, all the way down to sort of the 70 strike, and the upside being at the 200s, 180s. And so with the down move, if we look at BYND, it's indicated down like $10 right now. And like I said, I had a short delta coming in. I still have a short delta down here, even though I am short some gamma and theta. So should turn out to be a good day there. E-mini's currently down 8. We did see. I did want to talk about UVXY for a second. Now, if you are just learning about UVXY or just starting out, then just sort of bear with me here. As I just kind of discussed more sort of advanced stuff about this right now. So anyway, UVXY, if you saw the recent interview I had, we were talking about how every time it seems like things are just going too good to be true and contango is really advanced and everything just seems to be firing on all cylinders, that's the moment where this thing gets a little rip to the upside or volatility comes back into the market, et cetera, et cetera. And if we look at the charts for the VIX from that we were looking at just yesterday, you can see it really kind of tailed way down off there, hitting a low of 13.19 actually after the close on Wednesday, it looks like. And we were way down here below 14 actually for a second on the VIX, and UVXY got down to it actually did take out the all-time low by just a couple pennies here, and actually by 3, I believe it's by 3 pennies we took out the all-time low this week. It was the all-time low before this was 30.26, I believe, and if you watched my most recent video, I was saying, well, it's probably not the best time to short this when we're hitting the all-time low. Maybe want to look for a pop. And also, I gave some ideas of how you could really get long if you wanted to. Now, we haven't had a real big, we haven't had any sort of volatility spike here, but we are off of that low. And we could see this turn into something a little bit more. We have E-minis down 875 right now, which is really kind of no big deal in the context of things. If we pull up the chart for the E-minis for the last 20 days, we can see it. It is at highs here and kind of just kind of going sideways off of that. And this could just be getting ready to move higher again. There's no reason why that couldn't happen. But by the same token, volatility is off the extreme low right here. Every sort of volatility type measure here, even like VVIX, way down right now, 81.21, which is a low number. Usually with VVIX, we don't look at the number, but more the trend sort of thing. But volatility really has been really low, and it's gotten back to more levels typical of last year, if not 2017. Certainly nothing can prevent this from going lower and us getting into the 13s, 12s, and even back into the 11s and 10s. So don't think that that there's some sort of backstop here on volatility. However, it's certainly possible that we can get a pop. I think yesterday with the market really raging to the upside on signaling from the Fed that we will get a rate cut, the actual realized volatility was going up a little bit just because we got the big move to the upside. And I'm sorry, that wasn't yesterday. That was 2 days ago. And that's a reason for volatility to stay kind of firm. We know that it was really an anomaly that we got down into the 10s in 2017. So this could be considered kind of the low end of the range here at 1486. But once again, it's hard to tell in the moment whether this is if it's going to move lower or higher. So stay tuned on that. I'm just not real interested in pulling the trigger either way here. I'd like to see a little bit more of a pop maybe. I've been eyeballing out here in UVXY as a trade for kind of just a longer term thing. I've been eyeballing September, and I've been looking at it in UVXY and in VXX. So let's look at that just quickly here. If we go out to September, and I was just looking at an at-the-money trade in September, which would allow those 3 months for the forces pulling this down to pull it lower, but just kind of looking at an at-the-money trade, and I was looking here to like, I guess it's lower than at-the-money what I was looking at, but I was looking at the 30.27 puts vertical here, which is pretty close to at-the-money. It would have been at-the-money 2 days ago when we got that, we took out the all-time low, but something like this trade, 30.27 put spread, 188. Actually, I was looking at something different. I think I was looking at the 32.29, and indications before the open were showing this 170 in the midpoint. So if you were to put this trade on, and let me get out of the way once again, buying the UVXY September 32 put and selling the September 29 put against it. So $3 possible that this could be worth. If you were to pay 170 for this, if you did this, let's say, 25 times, so you put out about $4,000, looking to get a little over $3,000 back. So you put out slightly over 4,000, you get a little over 3,000 back. That seems like a great return. Anybody would be happy with that for a year. So you're looking for that return in 3 months. So, if you notice from the past, I'm looking at more reasonable type returns than, trying to double your money in a month or something like that. This is getting a great return over 3 months, and it seems very reasonable that UVXY could just kind of creep lower by a couple bucks in the next 3 months just due to contango and other forces. If we look at where contango is right this moment, we can pull up VIX Central, right? So VIX Central, and we look at contango right this moment, 3.2%. Now that's lower than it's been over the last couple weeks. Right before expiration, it got up to over 10%. Post expiration, contango only 3.2% here. But if you look, there is a big distance between spot and the futures right now. So that is potential room for this to go lower. If I draw my little potentiality little squiggle here, we can see that this area underneath between, this is our potential here as these futures slowly moving down to reach spot over time. That's the force of the futures moving towards spot, and then we have the force of contango, which is slowly moving us upward on this curve. We're moving upward towards the second month future over time. So as time goes this way, you've got the force of contango pulling us upward, CO, and you've got the force of, it's not gravity, but it's just that these futures have to move towards spot over the expiration cycle. You've got those forces pulling this down, and that creates, your engine is created by this. It's like a perpetual motion machine going around and round. As this goes round and round, that's what creates our ability to make money and our edge at being short this. So whereas there's not a whole lot of contango right now, 3.4%, if we multiply that times 30, so 0.034 times the stock price. Well, right now it's 32. Let's give it 32. So that's $1 a month moving lower, all things being equal. And so 3 months, about $3 lower. So that's where I get the numbers for the spread, 32.27 29 spread. 32 minus $3 is 29, right? So if you put the spread on, you can, it's like it would be a big winner by September, and you're just doing an at-the-money spread in UVXY. So there's the example. It applies even more if we get a pop. Like let's say we popped a 34 here. You could roll up 2 strikes and just kind of increase your odds on that one. So let's go to BYND as it continues to crash here. So BYND, overvalued by almost any measure available. So it shouldn't be too surprising to people that this is crashing. We saw the squeeze. The squeeze was on once. The squeeze was on twice. Hopefully you picked up on this squeeze and were able to either ride it up a little bit or were able to be shorted. I would not consider trying to scoop this down here. I mean, it may pop, but it still feels like all this like fast money people are going to be trying to get out right now because a lot of people heard about this one for retail and just tried to get on. They heard, it popped from like 160 to 200, easy money, let's jump on, and they're going to get stuffed here. I think a lot of people are going to try to pick a bottom here or pick a point where it's going to bounce from, and it might bounce, but the bigger percent chance is people get stuffed here, I think. I'm happy that I'm short here, but this is not about gloating about me making money. This is about looking for opportunity. And so I feel bearish on this issue. I think that at some point volatility will come in. But let's pull up BYND here and let's take a look back at our Tilray. And not that this is the same issue. It's a different industry, different product. If we back up Tilray to 3-year, we see the huge spike up, retracement, another spike, back down. And we go, are we right here on the BYND chart? Are we like, just in the first quarter from the left of BYND? And is this just going to grind lower from here? Well, I think that's the idea that's in a lot of people's mind. When you've got a lot of people thinking that this is like a Tilray situation, it can become a self-fulfilling prophecy. So does this chart just start to grind down in a descending triangle from here outward? I think that's a possibility that we have to be aware of. So I don't want to give people trading advice, but take that for what it's worth. I don't see this, let's just say, I don't see this taking out the 202 high anytime this year. But you'll have to decide how you want to play that information. I don't see... I think this thing could rip back to 100. I really do. I'm like more afraid of the downside than the upside right now. But who knows? We could get a, we're going to get volatility in this. So we could get a pop here. It could pop right back to 180. But I think the trend is lower. Once again, after this just made a $10, $11, $12 move overnight, probably not the best time to short it from here. It might go lower, but it's already made a pretty big move down just today. But I'm hanging out short and I'm going to stick with it. I don't think I'm going to cover right here. I don't see any reason to cover right here. So, but my short is from way, way higher. So I feel like I have a little room to kind of let it breathe here. So that's what I'm doing with BYND. My deltas are very tame right now. If we look at the chart here, you can see my deltas short. That's not the right. Short 12 deltas here. 1.78 gamma, collecting 82 a day. So, relatively tame position. I've got like these 1 lot and 2 lot stuff. If I look at it here in August, I'm short the August 270 70 strangle and 285.75 strangle. Plus, I'm just short like 70 75 call spreads, and I've sold like put spreads on the 100 strike against them. So I have the 100, 105, 110, 170, 175 condor on in August, and I've got similar condors on in different months. So I've got the 200, 215 120, 105 condor on in July 19, and then I've got just long, short a call spread and long a put spread in the 12 July. So basically just short deltas in 12 July series. 5 July series, I've got the 134, 138, 180, 185 condor on. And it just goes to show I'm looking to the downside here. I'm afraid that 138 strike is going to get burned here, if anything. And then I've got the 137, 140, 175, 177 condor on in the 7-day chart here. So yeah, I mean, I'm looking to get closer to that 140 strike here. But like I said, I'm just going to hang with the position here. Anyway, the open coming up. I don't want to bore you too much with all this stuff, but we'll have to see if this is just a small, teeny pop in volatility before things move lower, or if we're actually going to get some movement to the upside here. This could just be a little pop before we move lower in volatility, but we'll just have to wait and see. I'm thinking of okay, so we get the rate cut. Well, what happens if we get the rate cut and the market still sells off after that? Then you've kind of blown your wad by cutting rates, and you're using up your ammo. I'm not a proponent of this rate cut thing. I hope that I almost hope the market sells off between now and when they think of cutting the rate, so that it doesn't happen, because I think that the economy is doing well, the market's doing well. We should have normalized rates so that we have the ability to cut them when there is really a need to do so. I don't feel like now is a need to do so. Just to make the market get even higher highs is not a reason to cut rates to me. You try to normalize rates when things are good, get them back to a reasonable level, and then you cut when things are really bad, which is not right now. I think that the Fed needs to be more independent. And I wonder in my head when I say to people, I don't think we should have a rate cut, and people say, no, we definitely should. I wonder how many of those people, if the president were to come out and say we shouldn't cut rates, I wonder how many of those people would stop arguing with me and all of a sudden come to my side. I wonder how much of the pushback there is to not cutting rates is coming from people just being loyal to the president. And there's no way of really knowing that. And I've said before, if the president only had to worry about the market specifically and not all the other things that he has pulling at him, he probably wouldn't be an advocate of cutting rates right this moment. So there's that way to think of it as well. But what I think about interest rates doesn't really matter because I'm not on the Fed. But my opinion is we should not be cutting rates right now, and we shouldn't be cutting them anytime in the near future. If anything, we should be raising them. But, in the absence of that, I understand at this point with all the rhetoric that we couldn't raise rates from here. But in the absence of that, I think we should just not touch rates right now. All right. Thanks for watching. That's enough of my pontificating. And I will see you in the next video. I do have that interview coming out soon. I've got it kind of in my back pocket here, so I'm going to work on that a little bit today. Good luck with your positions, and go BYND. See you lower.